Fewer young people than ever before will have the opportunity to purchase a home in their lifetime. Simultaneously, the cost of homes continues to rise annually. However, a perplexing question arises. If nobody can afford to buy a house, why do they keep becoming more expensive? The concept of saving for a 20% down payment appears nearly unattainable. Moreover, rent escalates dramatically, sometimes without prior notice. A family home should ideally serve as the cornerstone of your financial stability. It provides you with a place to live while accumulating equity in a property that may one day become entirely your own. Owning a home through a 30-year mortgage is often more financially favorable on a monthly basis compared to renting in most cities. So, if you can manage to purchase your own home, you will not only have greater wealth in the present but also in the future. It's a fact you're likely aware of, but if you fall into the 75% of my audience who doesn't own a home, it's probably because of affordability constraints. According to a report by Redfin, only 21% of homes listed for sale in 2022 were considered affordable, a sharp decline from the 60% of affordable homes in 2021. This means that within just a year, two-thirds of previously affordable housing became too costly for the average American. Researchers conducting the study have concluded that housing affordability is currently at its lowest point in history. However, what is the ultimate outcome of this situation? If people cannot afford homes, shouldn't house prices cease to rise? Not necessarily. There are three reasons why the situation could worsen before improving. First, homes do not necessarily need to be affordable for you to buy one. An entire industry works to make this notion a reality. You don't necessarily save enough money to purchase a house. Rather, you save for a down payment. Housing costs are increasingly out of sync with wage growth, but a 20% down payment increases at a rate one-fifth slower in absolute terms. Therefore, people can still enter the housing market. According to Zillow, the average home sold in America in 2020 was priced at $230,000. By the beginning of 2023, the average home price had surged to $330,000, a $100,000 increase in less than 3 years. With the average American earning a salary of $59,000 before taxes, even if they saved an impressive 70% of their take-home pay, they would find themselves no closer to their home buying goal after 3 years, as home prices have grown at a similar pace. Most people, however, save only for a down payment, meaning that the 70% becomes 14% or 7% in a dual-income household with both partners earning average salaries. Even this reduced savings rate remains a significant commitment, especially considering that 57% of Americans cannot afford a $1,000 payment without taking on debt. It's important to note that saving at this rate merely keeps pace with price increases, without actually bringing you closer to your home buying objective. Lenders and banks, aware that many families must also cover essentials like food, rent, and other expenses outpacing wages, have adjusted their requirements accordingly. A report from the National Association of Realtors revealed that the average down payment for first-time homebuyers was just 7%, and for repeat purchasers who had built equity in their previous home, it was only 17%. With a minimal down payment requirement, home prices can increase significantly relative to income before home ownership becomes unattainable. However, the challenge remains. How can you make mortgage repayments if you cannot afford a 20% down payment? It's time to delve into the intricacies of how money works to determine if this situation can persist indefinitely. Now, let's explore the second reason why home prices can continue to rise even when affordability is a concern: limited supply. Few homeowners are willing to sell their home simply because they have a 30-year fixed-rate mortgage below 3%. The rental market, meanwhile, remains unaffordable, and moving to a new home would result in a higher mortgage rate than they are currently paying. Additionally, many individuals who moved during the COVID-19 pandemic have settled into their new homes and are in no hurry to sell. New buyers are also waiting for interest rates to drop. As a result, the housing market experiences reduced activity, with fewer homes available for sale. Lastly, the third reason prices can keep rising is the continued involvement of three groups. First, there are all cash buyers who have sold their previous homes and now wish to purchase new ones. Second, people who are moving interstate due to the unaffordable housing market in expensive cities continue to contribute to the demand for homes. Their higher incomes in these cities drive up local property prices, creating a feedback loop. Finally, investors who prioritize the return on their assets continue to invest in the real estate market. Although prices are high, investors can offset higher interest rates with increased rents, both for long-term tenants and short-term vacation rentals. In conclusion, while the housing market faces affordability challenges, several factors contribute to the persistence of rising home prices, making it more complex than it appears at first glance. Understanding how money works in this context becomes essential, not only for prospective home buyers, but for all individuals navigating the intricate world of real estate. As we continue to explore the nuances of finance, history, and daily life, we invite you to stay engaged with our content. Thank you for joining us on this journey of discovery. If you found this information valuable, please subscribe to our channel.